Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello, and welcome back to today's podcast, or welcome for the first time, whatever. Thank you all for leaving reviews. If you have not left a review, you've not shared the podcast, please do so. I very much appreciate it. Okay, y'all. We have moved, and it feels like I have not been to work in months. And it was a week. A week. But gosh almighty, do I love what I do. And I was so excited to get back to work because it's normal. And I get to talk about things I love rather than construction. Oh, fantastic. All right. Today we are going to talk about volume of interest. And I do a book study with a group of agents every Monday. And we did do Nelson's book. And I know that he talks about the volume of interest in there, becoming your own banker, but we are now studying building your warehouse of wealth. And if you've gotten Nelson's Becoming Your Own Banker, you've gotten my Farming Without the Bank, but you've not gotten Building Your Warehouse of Wealth, you can do that and you should do that. You can go to farmingwithoutthebank.com and you can grab it there. Or even the Nelson Nash Institute sells it on Amazon. If you want to get it there. I really don't care where you get it. Just get it because it is a very good book without numbers and really going over the concept in general rather than people getting so hung up on numbers. And so anyway, we were studying this book and we came upon the volume of interest. As a group, we talk about it and some people get it and some people don't get it. And as agents, we sometimes overlook this tiny little thing because we think it's not such a big deal. And clients don't typically really understand it, or readers don't really understand it. And so a while back, I really just thought about it. And for me, it's a comparison, a 15-year mortgage versus a 30-year mortgage. So let's say that you are the person that says, I don't want to do a 30-year mortgage because my home is going to cost twice as much. Now, we all know that. If we do a 30 versus a 15, the volume of interest that we pay to the bank is going to mean that our home is going to be twice the amount of money, right? So when we talk about a mortgage, we don't want to do that. So everybody wants to pay a 15. And the bank would prefer we pay 15 because of the fact that they'll tell you they can lower the interest rate just a little bit for you because it's a 15. But then they have more cash flow that they can lend to other people. Whole nother podcast. But what we don't talk about is the volume of interest that we are going to pay to the bank on car notes, boat notes, camper notes. Anything that is short, we as human nature say, you know what? Not a big deal. Didn't lose that much interest to the bank. Totally worth that new car. How about you take the volume of interest that you pay to credit card companies, every bank note that you have, and you add it all up over your lifetime. Add it up over 30 years, right? That is huge. And we neglect those because it doesn't seem that bad at the time. We are thinking short term on those notes rather than long term. If we have a 5-year note on a vehicle, what is the likelihood we are going to buy another vehicle at year 6? Very likely. What is the likelihood that we are going to finance it? Very likely. People tell me all the time, well, I'll always have a vehicle note because I will always want to be driving a new vehicle. The volume of interest is massive. We have to look at those short-term notes and add it all up. Farmers are absolutely fantastic at this. So are business owners, because at the end of the year, business owners and farmers get to write off the interest expense for taxes. So they know exactly what they pay every year in interest on their notes. They pay attention to it. The person that doesn't get to do that, it just goes by the wayside. We neglect looking at it, and therefore out of sight, out of mind, right? The other thing that we know is the volume of interest given to credit cards. Because the credit card companies charge us an astronomical amount of interest, we pay attention to that as well. So we really need to look at this and think about it in a different way. And we need to think about it in the aspect of every dollar that leaves our account is a big deal. Now, a lot of people will say as well, well, Mary Jo, I want to do this infinite banking thing because I don't want to pay the bank's interest anymore. Okay, you're going to pay somebody interest. You are either going to pay the bank interest or you're going to pay the insurance company interest if you borrow money from the insurance company via your policy loan. The difference is you own the company. When you borrow money against your policy, you are doing that with an entity that you own and control. When you do it with the bank, somebody else owns and controls that and gets the profits from that interest. So there's a difference in why we want to own the bank, right? Which Nelson goes over as well in his books. Now, let me spin this one more way. How about you look at and start asking, how can I make volume of interest? Because we're always paying it. And Nelson talks about the fact that we don't want to pay it. But how about we look at how do we collect the volume of interest? So I met with some clients this week who they have 6 children, I believe, 6 or 8. They were talking about one of the kids wants to go to college. The other kids have money in cash value of their policies. So if all the kids borrow from their policies, they can lend the sibling that wants to go to college enough money to pay for college. And then the sibling that's going to college just pays them back. And I said, at what rate is she going to pay you back? Well, they weren't quite sure. I said, well, she should be paying at 6, 7, 10%. Ultimately does not matter, because their whole goal with all of their policies is to create a family banking system. So if they're creating this family banking system, who cares if the college student has to pay it back at 10%? Because next time she needs money, the siblings have more money to lend her, right? It is the volume. Sometimes the volume does not matter or is a good thing if we are collecting that interest. Volume of interest is not always bad. Now, Nelson compares it and says, well, when you get a shot at the doctor, it doesn't matter how fast they put the shot in you, if they go slow or if they go fast. Ultimately, doesn't matter. What's going to matter is the volume of vaccine or insulin or whatever the heck it is you're getting a shot of. That's what's going to matter, is the volume of that. And so we have to think about interest the same way. And we have to put it into perspective, because so many of us only say the volume of interest matters when we have a credit card payment or we have a home payment. But the volume of interest does not matter when we're collecting interest or we are having short-term notes. Farmers and business owners are absolutely fantastic at understanding how much interest is leaving their account. I just encourage you all to continue to pay attention to every single loan you have. Nelson also goes on in this chapter to talk about the fact that in addition to what it's going to cost us in volume of interest on a home, we also are rebuying a home every 10 to 11 years. Well, what is the cost of closing costs and, origination fees and all this other stuff? And it's the same thing when we refinance a land loan or we're buying a new piece of equipment, whatever. Every single time we do that, there are fees associated with that. And so we need to make sure that we are paying attention to the big picture in addition to volume of interest. What is happening with all these additional fees? When we bought the land that we just purchased and we had like $20,000 in closing costs, that was ridiculous to me. Absolutely ridiculous. We have to take into account all of those things. Okay, that's all I got for today. This is a really short one, but I don't need to beat a dead horse because, I do that all the time and even I get annoyed with it. So pay attention to that. Think long term, because that is truly what this whole concept is about. And so many of us want to think short term and want everything today. And it is not everything today. It is what's going to happen in 30, 40 years from now. So let me know if you have questions, if you have comments, if you have concerns, if there is something that you want to talk about that I have not yet talked about. Please email me at maryjo@withoutthebank.com, and I am happy to answer those questions for you. And yes, I am the one that will respond. If you are not watching my Facebook Lives, every Friday morning I go live on Facebook and talk about the clients I've had through the week. Those are also on my YouTube channel, which is Mary Jo Irmen. So go to YouTube and watch those Facebook Lives, because that is going to give you a really good idea of just who I'm talking to every week and how we're helping them and what you can and can't do and all that good stuff. That is super, super useful. I know there are people out there asking, is she legit? Is she going to steal all my money? Does she even call people back after she, has them as a client? Yes, in fact, we do call people back. We call people back within 24 hours because I have an amazing team of people that helps me. So if you need anything, you know where I'm at. If you have not gotten the books yet, go to farmingwithoutthebank.com and you can grab them all as a bundle. If you go to the store, you can grab everything as a bundle. Get it all at once. Get as much information as you can, because this really is about you learning something, not me controlling something for you. I will not be your banker. This is you being the banker, meaning you need to be educated, which is probably why you're listening. So that's good. We have a great start. Hey, let me know, guys, if there's anything that you need or that I can help with, and I would be happy to do that. MaryJo@withoutthebank.com. Otherwise, we'll talk to you in the next episode.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.